Hello, everyone. I'm Jean-Claude at Beyond Mystic, and welcome to this very new series here on Beyond Mystic entitled Beyond the Charts. With me, of course, is the market oracle himself, Mr. Martee Hibbs. You can find him at bullshift2020.com. Martee, welcome back to the show. How are you?
Hey, I'm doing very well, JC. How about yourself?
I'm doing well, thank you. I'm excited to have you back on. Folks, thank you so much for joining us here today on this live interactive show. We are triple casting on Twitter, YouTube, and also for now, Rumble. They've been having some issues with the hack in the last couple of days, but it seems to be stable now. So welcome to all of you Rumble viewers. If you're experiencing difficulties during the show, please come and join us over on YouTube and or on Twitter. Martee, I'm excited to have you back on. This is a follow-up to the wonderful interview you shared with us and the Future Forecasting Group on the Moon episode a couple of weeks ago. And we had a lot of interest from our viewers to start looking at commodities perhaps in a different way. Now, a lot of our audience members, Martee, granted, are more of the hodler type. They're strong into their crypto, their gold and silver, and they're weary a little bit of playing this game. And they're weary because they've been told by many different other researchers on the web that at this point in the late stage of this Ponzi scheme, a lot of the things we see are manipulated to the nth degree. So that's in some cases dissuaded people from investing or from playing these markets. But in some other cases, one could suggest that there are perhaps through all of that chaos also opportunities to better your position. Can I get you to talk about that here for the people who might think, oh, JC, why am I looking at commodities? Why am I looking at trading at this end stage of the game? Martee, tell them why perhaps there's still some opportunities and some gains to be made. Let's set the conversation there.
All right. It's a long one. First of all, as far as your comments concerned about being manipulated, JC, everything is manipulated, even the cryptos. They are all manipulated to a degree with regards to the big, heavy traders, the guys that come in and smash the market, the JP Morgans, the hedge funds, they all do. However, if you understand how the market actually does work, then you can probably profit from it. Now, the big thing with commodities, people have to really realize is that probably every major corporation on the planet that manufactures anything whatsoever in any great volume has to use the futures markets to hedge their positions. The average person will probably tell you, oh, I've traded on the futures market, I lost my shirt. I've heard of people lost their houses. That's probably BS. The problem or the thing with commodities that differs it from, say, stock markets is that you're talking about raw materials. And basically, it comes down to two items. There are two topics. There's supply and demand. Like everything else in life, if things are in a shortage situation, prices go up. If things are plentiful, prices will come down. And that's the simplistic version of it. Now, getting back to the commodities themselves, there's so many varied commodities. What we're doing is we're looking at when we do the channel, we do our show with Dick, or even on Bullshift, what happens is people look at the commodity markets the same as they do with crypto. But here's what you'll notice. If you're looking at crypto markets, generally speaking, there's only one set of analysis that you need to do on there. And if Bitcoin, say, for example, is up strong on the day, 90% of the alts will be up strong with it. Yeah. If Bitcoin is down on the day, look at my board here, you'll see most of them are down. Now, it's not a perfect science. However, alts are generally the same concept that they are digital ledger technology based. So they will follow each other to that degree. Okay. So the leader obviously is something like Bitcoin or Ethereum. Most other of the alts will follow to a degree. With commodities, we're talking about the major things in life that we use every day. For example, if you are into, let's say you have a trucking firm, your concern with that trucking firm is what the cost of my energy is going to be put out with regard to diesel fuel or gasoline that will impact my costs going forward. So obviously, if you're a trucking firm, your big concern, your variable is what the cost of energy is going to be in the future. Make sense?
Oh, yeah, absolutely.
If I'm a house builder and I want to build houses for a living and I want to have a complex that I'm doing, say, 200 new houses, but they're not going to be ready for 2 years. Well, my concern is how do I sell them today or start a pre-sale when I don't know what the cost is going to be going forward? So what we do as a major corporation is we look into the futures contracts and we can lock in the price of that contract going forward. So we know what the cost of copper, what the cost of aluminum, what the cost of wood, timber, anything that we use in the construction of that house, we can lock in the price so that going forward, we know what our costs were. Now it's called hedging. Hedging, which means basically taking risk out of the market. Because if I didn't have that factor, I would say possibly sell a house today for maybe $1 million. And in 3 years from now, when it's ready, that house may cost me $750,000 or $1 million to build. So I'm losing money, or I could probably, excuse me, it's dry, go bankrupt. So it's very important with companies that are using products that are sensitive to price, that they control the cost. Otherwise, they can go bankrupt quite quickly. Now, take that across the board. We're talking about rubber for tires. We're talking about Starbucks that locks in their price of coffee because of the coffee crop could swing. And
or Apple securing their silver supply for their phone production.
Exactly. So there's two sides here. Okay. What we have is what we call end users. So that might be a grain mill that actually manufactures bread or whatever. They are concerned about the price of grain going up, because if they have to buy grain and continue to sell their bread the way they are at the price they are, they're going to lose money. But on the other side of that token, you've got the other guy, which is the producer. This is a farmer. Now, a farmer is not worried about the price going up. He wants the price to go up. What the farmer is worried about is the price going down. So the same idea, these farmers will lock in the price when it's at a profitable position for them, so that going forward, they've already locked in their price. Okay. So by locking in their price on the future, say selling the grain while it's in the ground on a futures contract, what happens is if the price drops between now and the harvest time, they lose on the actual crop. They could actually lose money when they take it out of the ground and sell it. However, they've locked in the price on the futures. They went short. So now they phone their broker and say, hey, I made $2 per bushel. Send me my money. So they basically paid what they've locked in. So that's the whole purpose. And people need to understand that it's a massive market and it's a bit complicated, but I like it so much more. I started in 1985 and I did both equities and futures. And then I really took a hold of futures and I loved it because it's such a different market. There's so many opportunities. So Bullshift 2020, just for example, was created in 2019 by me. Now, I've been retired for a while. I've always done trading. But the ideas that I saw on the charts, the potential of a major bottom in the commodity cycle. Now that includes the grains, which is all the foodstuffs, coffee, sugar, cocoa. Then we got the metals, palladium, platinum, gold, silver. You got the energies, heating oil, crude oil, natural gas. Then you got the indexes, the stock markets. All of these are futures contracts. And people really aren't aware of how powerful they are and how much opportunity there is if they manage their risk carefully.
So you've talked about Elon Musk, you've talked about the mine producer, you talked about the farmer. So I understand those two ends of the equation, why they're hedging their bets in commodities. But talk to the audience members who are neither the producers of products nor producing or taking care of any commodity themselves, but who might want to trade this market here to navigate some of the weird things that are happening in this financial transition. Why is perhaps looking at commodities and playing the game here, so to speak, might be an opportunity for them? Talk to them directly.
Okay, here's the deal, guys. Everybody has thoughts. Everybody that wants to invest has a thought. For example, anybody out here that invests in Bitcoin, why are you investing in Bitcoin? Because it's something somebody told you, something that you believe, something that you've read. It's the exact same thing. Think about it. We just had a major event in the Middle East right now where we've got tensions between Israel and Iran.
Yeah.
What's the first thought comes to your mind with regard to things like crude oil and natural gas? Disruption? Now, if you were to believe that, what you can do is you can actually trade these markets and make money. Now, the difference between stock and commodities are all individual. So take, for example, something simple like crude oil. There are 1,000 barrels of crude oil in a contract. That means when you sign up to buy a contract of crude, number one, you use margin. It's highly leveraged. The reason being is because unlike stocks, the contracts can't go bankrupt.
Right.
Okay. You're talking about physical contracts to begin with, but even the paper contracts, they're just simple short-term contracts. Whereas if I buy a stock today, I remember a company years ago was called Brex. You remember that? JC?
Yeah.
Very well. So people paid 10 cents for it. People paid $1 for it. People might have paid $100 for it. And it was an absolute scam. And unfortunately, and I don't want to.
Wasn't that guy thrown out of a helicopter at the end? Was that
Yeah,
the guy?
pretty much. I think that was the same guy. Exactly. So the idea here is when you buy a company, what are you buying? There's an old saying, as I said before on Dick's show,
Yeah.
don't go broke, go public. It just simply means they take your money as an investor.
Yeah.
They fly around the world. They live luxuriously. They eat the finest restaurants. They have their secretaries with them. They have their yachts, and it's all on your nickel because you're the one that's investing in that stock.
Right.
And unfortunately, there's a lot of shady characters out there.
For sure.
With the commodities, it's a simple supply, a simple equation of supply and demand. If there is a drought that's affecting the crop, there's a demand for that crop. The crop is going to go up in price because there's going to be a shortage, and people freak out and they have to buy enough for whatever, whether it's their country or their individual mill. So again, getting back to the commodities, it's just most people only hear horror stories, but it's because it's such a safe haven market that you can buy it. For example, gold has 100 ounces in the contract, correct? Let's round it out. Gold is $2,000 roughly an ounce. That means that contract, one contract of gold is worth $200,000. So if I buy one contract of gold, instead of having to put up $200,000, I can actually put up $10,000 and say, I want to buy gold. And I can control a full contract of gold, meaning that every dollar gold goes up, I make $100. But unfortunately,
conversely,
it goes down. And this is where the risk comes in. And this is where you have to be very wise, because if you overtrade and abuse margin, it will come back and bite your ass. And that's why, personally, jumping over to Bitcoin for a second, a lot of what you're going to see are people are going to get crushed on Bitcoin, because most people that I know anyway, a lot of them are traders. They're in, they're out. And unfortunately, if you've got $5,000 and doing a 5-to-1 leverage in Bitcoin, if it drops $5,000, you've lost all your money. Not just 1/5 of it, you've lost it all.
Right.
So this where it comes into understanding leverage, the good and the bad of it. And if I say, if you're going to leverage something, be reasonable, put up 30%, put up 40%. That way you're not forced out of the market. But if you go in with the minimum margin, which might be 5%, you're going to get your head handed to you more times than not. So just go back for 1 second. Bullshift 2020 was created in 2019 by myself, because I really thought at that point we were hitting the bottom of a multi-year bear market. And ironically, if you go back and look, March of 2020, when they did the shutdown and the flatten the curve BS.
Just for 2 weeks.
Yeah, 2 weeks, yeah. That was the absolute bottom of the market. Go look at all the charts, whether it's the stock market, everything went in the toilet. Well, of course, the insiders knew it was happening because they were in the meetings. So the average poor guy jumped out, got crushed, and at that point, that was the buy, and the market has gone nowhere but up ever since that point. Nowhere, straight up.
Good point. Why don't we start looking at this? So first of all, thank you for that introduction. It gives us a little bit of food for thought here, a different understanding and different ways perhaps at playing all of this manipulation. I think that's the part we're doing here, is giving people some tools here to better their positions. Why don't we look at this news item from a couple of days ago? The UAE officially stops using the US dollar for oil. Now, let's talk about, generally speaking, where does that leave us here in the oil as a commodity, but also in the dollar index? These two might be tied at some point here. You talked about the stress here in the Palestine-Israeli conflict also. Let's look at the energy market. What are your thoughts here moving forward in the next couple of weeks? Where is all of this going? What's it pointing to, Marty?
Okay, now a lot of people may not like this answer. I'm a purist. I am a technician, and here's why. Anything that's in the market, whether it's newsworthy or it's things that people know that we don't know, is already factored into the price already. For example, and I think I might have given this example on your show, Cargill is one of the largest food producing companies on the planet. It's mostly privately owned, but they're massive. They can move markets. So let's say, for example, JC, today you are the international buyer for wheat, or sorry, let's say soybeans in South America or across the planet, across the globe, that you're going to need, say, 10 million bushels in the next month of product, correct?
Yeah.
Your right-hand man comes to you while you're on the trading floor and whispers in your ear that they just had a 9.9 earthquake in the Pacific Ocean, and it looks like a tsunami that's coming towards South America.
Mhm.
Now, I know that's kind of far-fetched, but I just need to exaggerate it a bit.
All right.
You, as the buyer, what's your concern right away? Biggest producing country in the world for soybean exports, South America.
Yeah.
What's your concern?
Will I be able to source product here moving forward after this disaster?
So if you know what you know, nobody else knows it. What are you probably going to do before the end of business today?
Gonna clean out.
You're going to buy as much. The way it works, there's bid asks like everything else. Well, if you got to buy more and the guy's bid is up here, you're going to have to move up to his bid to get it.
Yeah. Exactly.
His bid's gone. You got to go to the next bid. So what you're going to see at the end of the day is this big move in the candle on the chart. You're going, what's going on here?
Yeah.
We know something is going on, but we don't know what yet.
Right.
Well, of course, in a day or two from now, we get news about the tsunami, and everybody then starts to jump on the wagon because they're right. Problem is, it's the old buy the rumor, sell the news idea. So I laugh at this. And I'm going to show you a chart right now. Let me go to
bring it up on the screen here. There you go.
All right. So what I'm going to do is I'm going to go to, let's go to crude oil. All right. So the crude oil itself. Let's have a look here.
Okay.
Now, do you remember? Can you see me? Am I?
Yeah, perfect.
Okay,
yeah.
Cool. All right. So here, look at this. Where has crude oil gone since the war situation with Israel?
Yeah.
Right?
Yeah.
Why? Because there are people out there and countries out there that know what's going to happen ahead of time. And this move up here was an anticipation of what came with the Israel-Gaza conflict.
Right.
So, of course, all the people that are jumping in this run end up getting crushed because these people down here sold it to them up here. So, unfortunately, you cannot, in my opinion, trade on news unless it's a black swan event that nobody knows about. Something of nature, then it's a different story. But anytime there are people conspiring or whatever to do something, there's always leaks. There's always insiders. Just like that day when they shut the world down, there were people in meetings around the world that knew what was going to happen to businesses. So the stock market went in the toilet as it started to drop. People get fearful. They see it drop. They jump in, which means they're selling, which pushes it down farther. And the guys down here are just salivating, waiting for it to get down to them. And they're the ones that buy it.
Just like before 9/11, there was people shorting airline stocks. We had the same type of shorting here just before this conflict on October 7. Also, it's coming out in the news now.
Totally.
So you're right. They knew this ahead of time.
That's exactly. So when you present things to me like that are standard or traditional, like, for example, you might say, as you're going to, I believe, about the next topic, which was the CPI or the PPI.
Mm-hmm. The Consumer Price Index. We can get into that here too, but why don't we do this? We're about 20 minutes into the show now. I want to give a taste to the audience members who are perhaps tuning into this series here for the first time to Beyond the Charts. I want to get used to seeing you do maybe a Bitcoin analysis, a silver, a gold, a dollar, and maybe a stock market. What do you want to do after that? What do you think?
Those are good. There's 4 or 5. We'll do those. We can start off with the dollar. That's probably one of the more important ones because that basically dictates prices of most things with the US dollar. Okay, so here we go.
Let's talk about the dollar here too, because we've seen over the last year a lot of researchers talk about de-dollarization, and we're seeing the BRICS nations come together. We're seeing more and more international trade now being done outside of the US dollar. We just saw the UAE now suggest that they would no longer accept the dollar for oil trade. Where does that bring the dollar? And at the other end, we're seeing Powell here suggest that he's bringing back QE to an infinity. So for the people who want to trade the dollar here, what can they expect here moving forward, other than perhaps some of the conspiracy theorists and some other analysts here? Let's look at the charts. What are the charts saying about where the dollar is going?
That's the best thing to do. And I'll tell you why. Because if we go back when I first started with the crypto viewing team, it was back right at this level right here. This was that it there? This double bottom. They did a session called Death of the Dollar. And as we know, the sessions they do are phenomenal. But at that point, I was getting a massive buy signal. And the videos are all online. If you go there, look at them. There's no faking this. We said the dollar was going number one, at least to par, and then 108 to 115. And that's exactly, you see this big 5?
Yeah.
That's 115 right there.
Yeah.
Now, at that point, we said, okay, it's coming off. Now, the reason I'm saying that is because this is nothing but human emotions. So if you said to me today, the CPI or the bit about the euro, not accepting Europe, not accepting the dollars, okay?
Yeah.
Here is today's candle on the chart. See here?
Yeah.
So this is an open market right now, live.
Mm-hmm.
Do you think it had any effect on the dollar? None.
Mm-hmm.
It did nothing.
Right.
So it's a long-term thing. So the thing with the dollar that I'm finding fascinating right now is you see these boxes. These boxes are put in ahead of time before I do my analysis for our subscribers. So what happens is we had a target here. All it means is, according to the Oracle, which is a program that we had developed 10, 15 years ago by a bunch of professors from South America, took my program, put it into a computer. It's not perfect. It's not the know-all, but it's very, very good. Okay.
Mm-hmm.
So what it does is it consistently gives me ranges, not a number. People say, oh, the crude oil is going to $99.50. That's bullshit, because number one, nobody can predict it that precisely. But what it does do is it gives us a range of numbers, JC.
Right.
And of course, it hit the number. Now, if you were in here when we had a box in here, a green one, to buy it, right at par 99, right in here, we call it bottom of the market. But again, it's on the Euler charts. I take them out as we hit them.
For sure.
And then we get here, we say, okay, this is resistance. Now, if you were in here and you're
Just to be clear, also for the audience members, as Marty and I continue to do these shows, you'll be able to go back and see where we're charting and follow us through time here. So I appreciate that, Marty. And I wanted to bring one caveat also. I did interviews with Dig Allgaier about the death of the dollar, and I want to make sure nobody thinks we're dissing here the remote viewing on the death of the dollar. They did not have a timestamp attached to that. They saw an event in the future, not knowing when. So they weren't contradicting Marty, and Marty was not contradicting them. I just want to make sure everybody understands that.
It's very important, because here's the deal. I do believe as well.
Yeah.
The thing is, where most people have a long-term outlook, I have a shorter term, because there's a thing called swing trading, and you can actually trade it back and forth. And I'm not talking day trading. Swing trading is more of a bit of a longer term. Yeah. So again, what I think could possibly happen here with the dollar is we need to get back above this 107.50 level, JC. If it gets back here, what it tells me is that the emotional tide is turning. Now, what could bring it back here? Here's some suggestions. So we have Europe and we have America. What if things were to get uglier in Europe, and you're a European citizen that's got a lot of wealth? Let's say, for example, there was something going on there that threatened your livelihood or threatened your ability to, say, even threaten the euro currency itself. What would your big concern be? How to preserve your wealth, right?
Exactly.
So for the time being, this facade, this whole show, dog and pony show, people trust this US dollar. Don't ask me why, but they do, or the Fed itself, or the treasuries, because it's the gold standard according to the world. Yeah. So the idea is what happened is you get a big, massive inflow of money from Europe into the US, what we call a flight to quality, which traditionally used to be the treasury bonds, right? Right. So from that point, what you might get is a move back up, and you'd start slowly seeing as things unravel in the US or in Europe. But if it does get past here, it's telling me we're in bullish mode, and now we're getting ready to run up to challenge the 5 up here. Now, if that were to happen over the next few months, what you could actually see is what we call the blow off top. In other words, the final culmination of the death of the dollar could be a massive spike. And I'll show you one in a minute just to show you what it looks like. Okay. And that's how it could actually end, just by absolutely going. Have you ever been to an air show and saw the aircraft or the stunt planes go straight up?
The crack up boom scenario.
Basically, yes. Same idea. So we're not there. And the beauty is this: people always expect massive pumps or massive crashes. They got to stop thinking that way. They got to look at it in a more longer term project. Even the stock market crash, it could crash, but it's going to take time. It's a slow bleed at first. It picks up speed, and then ultimately it'll probably have a crash at some point. Okay. But right now we're in a bearish mode. So I only play this from the short side at the moment. So the box we've got here is resistance. So if we get up around this 105.5, 106.5, if I'm long from this box here, which I said is a buy zone, then we would possibly take profit there. Now, if it gets through there, no big deal. It might run up to here and then check back again, and then you can get back in and get on board with the rise up. So it's always gives you an opportunity to get in and get out again. And this is more for traders, but longer term, if we get through 107, I think we ultimately could have that scenario, which is the big blow off top or the crack up boom, as you said. However, right now, the momentum is on the downside. If we go back into the red box again and break the bottom and close below that bottom, we're headed towards this bottom here. And ultimately, we could get more of this down, up, down, up, down, up, down, up, down. And before you know it, it starts going into free fall, something like the bond market did.
Right.
So this is the dollar short term bearish. I would turn bullish if it gets back and closes above 107, 107.50. That's how I would play it. All right.
Fascinating. I love that. Okay. There's a lot of gold bugs and silver bags in the chat. Why don't we start next with silver? Bring that up.
Silver, sure. We could do that. We can do so. All right.
Fascinating, Marty. Folks, I do see you in the Rumble chat, and I know there's a few people there, depending on what country you're watching from. This is a distributed server issue at Rumble. Some people can watch us okay from different countries, some cannot. So I do apologize for that. Not under our control for now, again, with the hack happening there since the weekend. So please, if you're having issues on Rumble still, please come over to the Twitter feed or the Rumble, or the YouTube feed here for Beyond Mystic. Sorry about that. Andy, Marty, go back to silver.
Okay, great. I'd like to start with gold actually before silver.
Okay, let's do that. Okay. Yeah.
So you're going to get a kick out of this one, JC, because unfortunately, most people don't remember what I say, including yourself. When I was on your show that day, do you remember where gold was? I'll tell you where it was.
2000? No.
It was right here. It was right here. Go back and check the video, guys. Anybody that's on here. What we did say was there's a line in the sand here. I said, but I don't believe the line in the sand. I don't think it's going to be a problem. The Oracle gave me a number of 2150.
Pretty close.
The very next day, JC, it went to 2152 and lost it.
Yeah.
Now, that night I did an alert for my clients and I said, hey guys, that's it. For short term, it's done. That confident. There's that spike we talk about. You see that? Completely runs up, makes a brand new high, completely loses it, and the candle turned red. Now, this here, if you understand candles, it opened right here.
Yeah.
Right near the top. Ran up at some point, but by the end of the day, it closed down here at 2043. So it had $150 swing in that one day, and it was either one or the second day after we did your show when we said 2150 was the Oracle number, not this one. So now here we go. Here's our support box. So we expect this week, this probably should put in a short-term bottom on gold right here. From there, just a slow, steady climb. But we do have numbers suggesting that if we get back past the 2150, which I think will probably happen in the next 2 to 3 months, maybe earlier, we have numbers up into the mid to high 2000s. Now, that's not a good scenario for the economy because things obviously are starting to unravel because people are going towards gold, but it's still longer term bullish. Short term, right now, this move after that day, we said, okay, guys, that's it. We're going lower. And that's where we're going. And we still got a bit more work to do, a couple more days maybe, and then it'll slowly turn back up again. And then probably between now and Christmas, it will get back to the point where it's going to head up and challenge that top again.
In the interview I did yesterday with David Morgan, folks, I recommend you go check this out. It was a fascinating interview. You can find that on the Rumble and YouTube feed as well. We talked about that spike. And first of all, you're absolutely right. If I bring up the screen of the last interview, you did mention the 2150, and I think we hit that 2140 exactly on the chart here. Let me see if I can bring this one
2152, it shows on my chart.
Yeah. What do you think happened there? Like, what was the scenario? Who was talking in somebody's ear on the trading floor here? What event in the world created this? Or is this controllers letting off steam of the pressure here? What do you think happened?
Okay, first of all, you have to understand gold and silver is a little bit unusual with regard to what we call control or fixed markets or rig markets, because you're dealing with something that traditionally is money, and the banks don't want silver and gold to be there as money as a substitution. If you look at anything in our life, JC, whether it's gasoline, a hamburger, whatever, it's gone up tremendously in value. But for some reason, silver's still at $23.
Right.
Go figure, right? So what happened here is this was a Sunday night where most people aren't even awake. Most of this stuff happens while we're not awake. It's just like when they the Jekyll Island project where they rammed it through like a day or two before Christmas Day. That's just the way it works, the system. Now you've got people like JP Morgan. So here's the problem. With the futures market, it's not the physical market in the sense that futures contract can be created out of thin air by any two people. Okay. So they could actually come into this market and say, okay, there's probably 10 million ounces of gold in the pipe to be purchased. People trying to buy it all the way down. Well, with somebody like JP Morgan's money, they could come in and say, fill those orders, and they would crush the market. The bottom would fall out of it. As we said before, if you and I are playing poker and I walk into the poker room and we're going back and forth, you're up 100, I'm up 100. 3 hours later, we're tired. I pull $10,000 out of my pocket cash and say, okay, JC, let's go. You don't have a hope in hell because I have enough cash that I can crush every single trade you do. All I could do is go all in on every hand, and you're going to lose. It might take 2 tries, might take 3, might even take 4, but it's probably not going to take 5, and you're done. So you can't compete with this. But this is why we're seeing a different market in the actual physical versus what we're seeing in the paper manipulated market. Okay. So this did happen, and they saw it broke the trend line. So they got ready because a lot of people get excited buying on strength, which is generally the way you should do it. But we said here 2150 was the target. If I had been awake at night and watched it run there, I might have shorted it, but I wasn't awake. So, of course, that was the marker. And now it comes back, licks its wounds, turns around, and it'll start back up again. So it will break out. But again, to me, gold is not something that's always been what you call a millionaire maker overnight like Bitcoin. Gold has always maintained its value. And as I said before many times, gold doesn't move in price. People say, oh, price of gold is 2,000. What it really tells you is that the dollar that you're valuing it in is really becoming more and more worthless by the day.
Right.
Just like the Weimar Republic, where you needed a wheelbarrow full of money to buy a sandwich. Same idea here. Eventually, gold may go to 10,000. But again, like Cliff High even says, what kind of a world is it going to be if it's costing 10,000 for gold? It's going to cost you $25 for a gallon of gasoline. Right.
Speaking of Cliff High, I did talk to him about your analysis in the last show of the $35 silver in the short term. And he said, yeah, he says, my data is picking up 50. So he's on the right track. So let me bring that up also. But before I do that, this is the clip that Marty's talking about here from a couple of weeks ago, where he was calling that 2150 in gold. You can see that on the chart there. So good on you, Marty. I appreciate that. Let's move to silver now. I'll bring your screen back up here if you want to share that with the audience members. You did talk about perhaps here a breakout. We're in this cup and handle formation. You can see that in the last show, you mentioned that we couldn't see a 35 here in the near future. Where are you since that last analysis here on silver?
Still good, looking really good. Now, here's the same day. This coordinated with the same thing. This was our zone we had on at that point. We had that on there. Go back and look at it again. If we didn't change these, it's there. And it went up there and made even bigger reversal because we said we're going back at least to the gap. And here we go. Another 2 to 3 days, potentially, we're looking at a bottom here in silver. And at that point, all it means is this is a good area if you're looking at buying it. It's not trading recommendations. It's saying if you are looking for a spot to get long, my oracle is telling me this area is probably a good spot to be looking at getting in.
And what's that area? $21, $22? What
this is between 21 and 22.50, somewhere like that. 21, 22.50 in that range, that green zone. When you see the green, it generally means an area to be buy. This is overhead resistance. This is farther out. This is major resistance. I shouldn't say major. That's not true. That's our next target. The major one is up here. There's the 35 to 38.
Let me hold on a second here. I'm going to bring up the chart from that last interview. We're a little bit zoomed out here. You had that first box there. You were right on the money. These are the next stages here that you were talking about at the time. So if you want to zoom back out on your chart and explain to the audience here what your best guess is to when perhaps that 35 might hit, if we blow through it, what are the scenarios we're looking at?
Okay, so again, what the oracle does is that's something most people don't get because most people have issues with timing on everything. And you know that, right? With everybody we talk about, whether, the $600 silver is potentially one or the death of the dollar is one. Timing is not always. But with the oracle, I depend a lot on the time. And it's showing me that potentially as early as, oh, wow, that's out to end of summer. no, sorry, beginning of summer. So it could be before then. But if things change in the Oracle projection, and the way it works quite simply is it takes a combination of volatility and time. So if we start seeing things really get volatile, it extrapolates the numbers so that the numbers change and the dynamics change just like anything else.
Yeah.
So if we start seeing days of $1 and $2 consistently, the numbers for the targets also change. That's what it's a moving vehicle. So right now I expect this is a bit of a funnel. Once we get through here, we could have a spike. The funnels are interesting because what they tell me, and we just had one on Bitcoin, I took it off because we met it, is it'll say, okay, guys, get ready. In the next 14 days, we could get a massive move, and it has to happen within those 14 days. And surprisingly, how often it does work very well. It just did for Bitcoin. But anyway, so that's silver, and silver does look like it's ready here to bottom out again. And this is a day chart, so we should be able to, I would say before the end of the year here, this shows out to March.
Okay.
That we could be up to around the $28 level, somewhere up around there. And it could be higher. It may change as we go forward, but this is an area, if I was looking at buying it, I do like it. It's still got that same formation we had before we talked about that projects up to about $35.
Let me just backtrack here, seeing as you're a purist. I'm having trouble saying that. Let's look at this cup and handle formation. Explain to the audience members why this is so bullish for silver. What's this formation? How is it formed? And why is it bullish in your opinion?
Okay, so here's the deal you have to understand about technical analysis. It's almost a self-fulfilling prophecy because what's happened is over a period of time, chartists have studied patterns. And generally what happens is if, let's say, for example, the highest gasoline's ever been is, say, $300 when things were really bad, $300 a barrel. I'm just giving you an example. It wasn't. I know it was like 149. Okay, let's say 149. To get back there again, people look at this and say, wow, is this really much worse than it was in 2008 when we topped out at 149?
Right.
So you get this area of saying, let's take our profit here because we don't know if it's going to break out into new highs. So if you start identifying patterns on charts, it's emotions is all it really is, human emotions. When there's fear, prices either move up or go down sharply. Or greed, it could be going up or going down, either way, but the idea is you get these big moves. So you get fear, which usually causes a sell-off, or greed, which is you get these big, huge moves, and people are FOMOing and they're afraid they're going to miss out, so they jump in the market.
Right.
Okay. So the cup and handle formation that we have here is basically a pattern that a lot of people follow. And when I say a lot of people, a lot of technicians. So if you get enough people here.
Hold on a second. I'll bring up your chart. This was the tweet that I shared with the audience members, but let me bring up your chart here. There you go.
Okay, so here's the chart. So the cup and handle idea is something like this right here. See that?
Yeah.
And then this is the handle right here. So generally the way this works, and again, like I'm not a big technician. I don't put much confidence personally in these analyses because they might conflict with my own or what my numbers. I just strictly follow my numbers, but I am aware of what they are. And I'll give you an example. So if I were to take the bottom here and measure up to this, what we call the neckline here, that shows a $15 move. And then if I go from the bottom of the handle, $15 would get you up around $35 right there. Now, some people measure it differently. Some people may measure it from the neckline here and go up. How much they say $15, which would take up to $44, which is probably closer to what Cliff is saying. So technicians look at this and they identify it. So what they'll do, JC, is they'll wait for the actual breakout confirmation that it's an actual breakout, and that's where they'll jump in. They will not fool with a market that's chopping back and forth. They're not interested in that. They're looking for a genuine move, a genuine breakout, and they'll get on because contrary to what most people believe, and most people, again, the public are generally wrong in that everybody says with Bitcoin, when it pulls back, I'm getting in. Well, that's not really the way it works because by pulling back, it's a show of weakness. You don't want to be buying something when it's weak and coming down and trying to bottom pick and guess the bottom. Secondly, you probably won't get in because generally when these markets correct, if it's just a correction, it may spike down in the middle of the night or during the day. And unless your order is already in there, you're not going to catch it anyway.
Right. Exactly.
So a lot of people buy on strength. And that's generally the way to do. Because if you look at comments, most people say, when it pulls back, I'll buy it. And if that's generally the comments, we know the public generally is wrong. The masses, I should say, are wrong. They are. It's just unfortunate, but it's true, right?
Most people chase momentum upwards.
Yeah, exactly. When it gets really high, then they jump in, and then of course it's too late.
I
right?
remember teaching about Bitcoin. I used to go to this dojo, this martial arts dojo, and they had asked me, says, "Oh, JC, you know about Bitcoin? Our members are interested. Can you teach us about that?" It was $500 at the time. Okay. And this is a while back, and we was teaching about this, and we are talking about some of these predictions, and a lot of people didn't buy. And then a year later, they asked me, "Oh, come back and teach about Bitcoin." At that point, Bitcoin was at $5,000, and then suddenly people started buying into the move up, and some made crazy money up to $70,000. But there were still people who bought at the top at $70,000. A Canadian here at the time, I forget which course.
Yeah, close to 100, I guess. Yeah,
yeah, exactly. But just to show you there too, like they were resistant, and they only started buying when there was real momentum. So typically, that's not the investment advice that Warren Buffett
exactly.
That's
right. He's not.
Yeah.
Here's one thought also for while I'm because my mind's all over the place, as you can probably tell. Emotions are the biggest roadblock in trading, because like anything else in life, your emotions is usually what dictates your movements. If somebody starts to see a massive break, and this is why I think eventually when a real bad break does come, and it's going to be probably a black swan event, and it will come. We don't know when. I'm just guessing. We'll look at the stock market in a bit, but when it comes, initially everything is going to suffer, because as things start to break, people are they could care less. They don't care about what it is. If their money is going down, whether it's crypto or silver or gold or Bitcoin or the stock market, they panic and they just want to preserve their wealth. So they take part in it by selling, which causes more pressure. And unfortunately, that's the problem with emotions. So I'm a very emotional trader. So for that reason, I usually take a position. I have my targets. I follow what I need to do. And I don't second guess it. If this says sell, I'm selling, because there'll always be tomorrow. But the problem I see with most people is even in the futures contracts, they will be so happy to take a $500 profit. But when you have a $500 loss, they dig their heels in. They say, no, it'll come back. And before you know, it's 1,000. They go, oh, wow. Now if it gets back to only 500, I'll get out. Well, the problem is, you can see what's happening here, right? If a lot of people are thinking the way, now they're not sleeping at night. So they're completely wrecks emotional, because they're losing money and they can't sleep. So of course, at one point it gets so bad, they just say, get out. And of course, when they get out, it's usually the bottom. So emotional trading is not good. So what do you want to look at next? You want to go to,
I want to get into Bitcoin. My dog's about to bark here, so if you want to set up your chart. But before I do that, I wanted to show the audience members, this was me teaching a couple of years ago. I think this is 2016 or 17. That's an old one. At any rate, a lot of the guys there sitting did quite well on that Bitcoin class at that time. Okay, let me bring up your chart here and let me know.
Okay. Oh, there he is. Okay, there he is. Your delivery guy is there, is he? Okay, so guys, here's what we're going to do. I think JC might have just stepped away. Yes, he did. So, okay, I'll continue on here with this. So basically what we've got here is the chart's been updated this morning. So here is how it appeared yesterday. It looked like, let me pull this down here. It looked like this. Now, what this represents is called a funnel. And what the Oracle gave me with this, I'll just lighten it up so you can see it here. I'll put a really light green color in here so you can see the target. There you go. So what this gave me here is our target on Bitcoin for a long time, since back, again, you guys have to trust me on this. Go back to our site or go back to Dick's site. At this point right here, right around this 17,500, 18,000, we pulled the pin and said, that's it. That's the bottom. We're heading into a bull market, but the bull market won't take effect till we get to about 35,000. Well, of course, you can see what happened here. Once it started up, it didn't really correct. And as we got to this point here, we started getting a few funnels. Now, this funnel here, for example, suggests that once we get breakthrough here, we're going to have a massive move within a couple of days. Well, of course, like 1-2 days, it went from 30,000 to 35,000. And that was the top of our box. So at that point, we're saying, okay, this is a scenario where we should possibly get a correction. What does that mean? Well, it means either 1 to 3 or 4 days back, at least pull back, and then possibly go back and retest it. Well, the problem is if it doesn't pull back, it means it's a show of strength. It's not even correcting. So if we go sideways for 5 to 7 days, which we did, we are now looking at our next move. And our target back here, guys, back here was 38,000. And it's funny enough, anybody that's on here that knows Jason, he had a dream and I saw it. So we talked to each other and he goes, yeah, I've got 38 as well. So I got to 38 and it was stuck there for a whole 2 weeks. Now, at that point, what we did is we said, okay, we now have a funnel move. Now, the funnel, again, I just drew this, JC, you weren't on here, just to show them what was here 2 days ago. I took it away because it's completed. But the funnel had about a 10 to 12-day window where we're going to spike to 51,000 potentially. Not that we were going there, but it could. Well, what happened, of course, is it got to our next target, which was 43, but it stuck its nose above it and came back again. And at this point in time, when we broke yesterday, I came on with an alert for our clients saying, that's it, at least 1 to 3 days here. We're going back down. My guess is right now, we are getting a little bit of a dead cat bounce here. I don't think we're going to get back up to the box. I think we're going to head lower, and we're going back to this breakout point, which is around 38 at least. So somewhere around there. Now,
let me hold you there for a second,
Sure.
Marty.
Okay.
I'm going to be having Jason 4 on tonight. This is the Beyond Crypto Roundtable. I'm rebooting this series. More and more interest now coming into crypto. A lot of new viewers coming up. So Litecoin Lisa and Joe are going to join me for that. Just to let you know, he's in a trade right now. Joe had forecasted in his dream that 38,000, similar to in your chart, and he sold off big time here at 38, waiting to get back in. He's got projections here into where he wants to come back into the trade. Now, looking back at your chart here too, explain to the audience members what scenarios could happen once we're back into that 38, that green box here. Where do we go from there? You have a big red box at the bottom, but you also have some higher numbers. Where do we go from here as per the charts?
Okay, so in the funnel that we had here, we had some stiff resistance before the top of the funnel. The stiff resistance is 47 to 49. The funnel went to 51 up here. So what we're saying is we could have got to here, one more pump, but when it broke structure right here, then we just said, okay, that's it. We're starting our correction. Right. So what I'm expecting, this is how technical analysis works. You don't just predict the future. What you do is you predict a bit at a time. So right now, this initial break suggests we're trying to crawl back up, a bit like a dead cat bounce here, where we're trying to crawl, but I don't think it will unless there's some news comes out, maybe the launch of the ETF or whatever, something to spike it, something kind of unknown. But right now, we're pulling back. We're at 41.2 as we speak, okay? Yeah. My guess is we're headed back to the green box. At the green box, that's where the initial support is. But if we stay here and don't really head back up again over the next few days, the longer it stays here, the more I'm concerned in the sense that this is a real correction, not a short-term correction. So a real correction to me is one that we've been talking about for weeks, a minimum of $10,000 correction. Okay. So right now we're only down a couple of thousand. So if we get into this box and it's
10K down from 38.
No, 10K down from the top, 44, down to 34, 33, 32.
Okay.
This box, okay? So right now...
Just so you know, Joe's looking more at a 50% drop from that 38 in his trade. So
I'm not, but that's cool. I mean, Joe's got his own method.
Well, this is the whole point. We're just having conversations here of where people are seeing things.
That's all they are. Yeah. So initially, if you're looking to buy on a pullback, you might not get much more than this 38 because that's the support level that we broke out through, or resistance level now becomes support. But if we linger here for the next week or so, we could possibly get down to our major support, in my opinion, is between 29 and 31. That's where I don't really see it going below there. I don't, unless it's something catastrophic that comes out.
Right.
Another like an SEC security thing that's banning Bitcoin or something crazy.
But how about a huge cyber attack where that seems to be in the news right now that could, potentially have some havoc in our financial systems also.
Good point. But there's a caveat to that as well.
Okay.
That would be an excellent opportunity because then what you're going to get, JC, in my opinion, is exactly this. You're going to get something like, let me get this to work here for you, like this, right? and then you're going to get it closing back up here. Something like that. What that's done is it's done exactly what gold did. It went up, took everybody out, washed everybody out that's long Bitcoin on leverage.
Right.
And now from here, we slowly start back up. And then within a week or two, we're going to break through here and go to our next level. We are in a bull market on Bitcoin. We are in a bull market. So I don't really see the scenario that a lot of people, like there's people out there, I know there's a few on YouTube that have still been calling for 9,000. I really don't see that. Now, if the chart changes for me and we start getting into this major support level at 31 and it stubbornly stays here and it's not moving up, then I'll get my red flags will come out and I'll start getting numbers, and then they'll tighten up here and they'll say if it breaks through a certain level here, we're going deep. And then of course we could end up going all the way back to 20,000 again. I don't think it's ever going to go below 20,000, but that's how it works. As it moves, it tells you the next few days about where the next support is, and you can tell whether or not it's an ugly situation. If we go down on that news you were talking about and back up, that's a washout. That's ideal. And from there, we've already seen the bottom. That's what we would get in a case like that.
Oh, that's fascinating. Okay. Just so you know, Cliff High is picking up something in his webbot data also around the December 22nd or 23rd. He called it, he had three words associated to it: crisis, crash, and spook. So he wasn't sure what's happening. It could be a spook in terms of the cyber attacks, like the hints that we're getting now too. So are you seeing anything in your charts right now that could be a setup for something, as you say, that's already priced into the market here, that some gyrations maybe just around the corner here in your charts?
Yeah, I believe personally, and this is from the charts, that something is going to give it up in the energy sector. I don't think the energy sector can be as compressed as it is now. Plus, I'm starting to get some preliminary short-term buy signals for oversold conditions in both the crude and definitely the natural gas. So unless you think that it's just going to go away in the Middle East, it's not going to ramp up, then you're on the same page as most people that there's a warm winter, blah, blah, blah. We don't need the energy. I don't buy that.
Right.
These markets set themselves up. And I do believe that, again, if we get a crash in crypto, it's going to be a short-lived one, and that's going to be an opportunity. But the only way you're going to get it, if you're trying to get in, is to bid lower and have your orders in, because it'll probably happen while you're asleep. Right. And either way, if it doesn't, if it's when you're awake, it'll still spike down and back up again. That's usually the way, because in my opinion, fully, we are in a bull market in Bitcoin.
Fascinating. Can you scroll back there? I wanted to ask you this question also from a TA perspective. If you look at Bitcoin from day one, if you want to zoom back out there for the big view, do you see that Bitcoin is still relatively in a, I would say, normal, typical trading pattern, or is it somehow now starting to diverge? Cliff High had this in his webbot data. I think it was in the Bare Naked Wealth reports from 2017, where he saw that eventually Bitcoin would decouple from some other trading patterns. You just mentioned that the altcoins, for the most part, they kind of track here Bitcoin through the markets. But at a certain point, it was suggested in the data that that would break. Are you, when you look at the long-term charts, looking at Bitcoin, seeing that perhaps we're getting close to a day where this decouples somehow? Has it already happened? What do you see, Marty?
Okay, so let me just take it from a different angle and answer your same question. Basically, people need to understand that being from Canada, you and I both know what the Vancouver Stock Exchange was all about.
Yep.
About buying penny stocks and becoming rich. And 1 in 10,000 did that.
Yep.
I believe that most of the altcoins are basically concepts and ideas that are trying to be developed, and people are jumping on them and doing 10x and doing very well. But ultimately, there's no way they're going to survive all of them. They just cannot survive. Yep. So I see a decoupling there where you're going to see Bitcoin and the main tokens that have proven the test of time and that have a real use case scenario will do very well for themselves. Right. And the thing I've seen is we've dropped a lot more in the alts than we have in Bitcoin. So just to give you a quick example, let's look at something like, let's do a Link. How about Link? How's Link look?
Hold on before we get into those alts. Just to add to what you're saying there too, there's also a big data set and some of these older webbot data reports that suggest that most, in a 90% range of these altcoins would disappear. They're complete shitcoins. At some point, they're no longer there. They no longer exist. Are
I
we
agree.
close to that data set manifesting now? I don't know, but that's why I'm asking you. What do you see in the charts? Has that
Okay.
has that transition already begun? I guess is what I'm asking.
Well, not quite yet. Here's why. I believe
Okay.
a lot of the alts, even the shit coins, excuse my French.
Yeah,
It's French, right?
I'm French. Yeah,
But all
so I don't have to apologize. Keep going.
so here's the deal. I believe they will have a big pump. They will. They will
Mhm.
go with it. All what the old saying,
The tide rises all ships.
yeah, whatever.
The
So
tide
the idea,
rises all ships.
yeah, that's right. So
Yeah.
we will get a big pump, but they won't last, and they will diverge at that point. They will.
Okay.
But again, because most of them like have been down 95%. I mean, like look at Luna C or whatever it was. Like it lost 99% of its value. And then last week it went up 2x or something. I'm not following it, but the point is you're getting a lot of volatility. So I do believe, and the other one that people are famous for is saying Bitcoin, and I think it's the NASDAQ. There's a big similarity. My analogy that I always gave Dick was this. People go, why does it not diverge? Why does it not separate itself? Here's why. Picture a helicopter sitting on top of a building. And the building is the economy. And the helicopter is being built and being refueled and tested and so on and so forth. The economy starts to fall and it shakes. And then the helicopter is going to go down, traditionally go down with it, because there's a big momentum down and it's just not ready yet. But at one point, when I believe the forces that are putting this all together, because there are forces moving this, whether it's the manipulation of the stock market, the economy, the CBDC system, the whole system is being manipulated in the sense that there are planners out there doing this. You'd be kidding yourself if you don't believe this is what the plan is. So what happens is when they're ready to destroy it, to destroy the stock market, to get rid of the pension funds and all of the corporate debt, bonds and things like that, the things will start to crash. But what will happen is that helicopter, which is Bitcoin, will suddenly just start lifting off the building and it will fly away. That's kind of weird scenario that I've created. But when the time is right that it needs to do what it needs to do or what it was purposed to do, it will do it, but not before then. It doesn't need to do it right now. And I do believe that if it is successful, and I believe it will be, that it will surpass pretty much everything there is.
Mm-hmm. Wow. We're getting close to those $100,000 Bitcoin parties that Cliff has in his Webbot data report. We'll see where that goes. Maybe next year, the way things are going now, probably not before Christmas, but who knows? Again, there's always the black swan events.
There's black swan event. I mean, realistically, if someone said, let's say no, but you can't tell. You really can't tell, right?
Right.
Okay, so next one you want to look at. You want to look at the stock market, I think you said?
Yeah, let's do that. And before you do that too, I just wanted to share with the audience members again, if you're just joining us here now and you want to have more about this crypto talk, please join us for the reboot of the Beyond Crypto Roundtable this evening at 8 p.m. Eastern. It's going to be triple cast here on Twitter, on YouTube, and also on Rumble. I invite you also to check out this new Beyond the Vault weekly update series that we're booting up this week. That's going to be on December 14th at 1 p.m. Eastern with Mr. Andy Sheckman from Miles Franklin. You don't want to miss that. That'll be Thursdays at 1 p.m. moving forward here on a weekly basis. If you haven't seen the Beyond Crypto Woo in transition here, the forecast for the month of December, I invite you to go check that out. You can find that on beyondmystic.net, where currently now for the next couple of days, we have the Insider Access Pass on sale for 50% off. A lot of you were asking for that here for the holidays. So there you go. IAP 50 will give you 50% off here. You get access to all of our content in priority viewing, as well as the exclusive programming for the Insider Access Pass that includes the Janine channelings that can only be viewed there on IAP. So that's valid there for another couple of days. So take advantage of that as you can. All right, Marty, let's go back to the stock market. A lot of people are suggesting here that there might be a crash here as well. We're hearing all these rumblings. We have the bull ponies of the world screaming from the top of the roof here that God is about to take his revenge and the stock market is about to crash. What do the charts say about where the stock market is leaning right now?
Okay, great. Let's have a look here. So here's the deal. Remember we talked about that big event back in 2020? Mm-hmm. There it is right there. That's the day the world panicked when everybody, insiders knew because they were having the meetings and everybody dumped, and look at here. And then you get this big reversal candle, and that's the absolute bottom. The old idea of buy the rumor, sell the news.
Yeah.
In this case here, when everybody panicked, it was time to buy. That was the absolute bottom. So here we are today. So I'm looking at the Dow. Normally we do the S&P 500 because it's a broader based index, but I like the formation more on the Dow. So what we've got here, JC, is a 5-point reverse wave. Now, the 5-point reverse wave, I did not invent it, but many years ago, I sought it out and I developed my own rules for it. The rule here is that the fifth wave has no limit on the size of it, but there are rules with regarding to the other waves. And see how nice pattern that is? Mm-hmm. So we are now, believe it or not, approaching the all-time high on the Dow Jones. So everybody and their dog, as far as I've known back for 6 months or more, has been talking about this crash, true or false? Mm-hmm. And where's it gone? It's gone nowhere but straight up. And back here on the S&P, we had a marker in there to suggest, let me just pull it up here. There, you see that box? That was put in there and it said, that is the bottom. And as you can see, we were pretty right. It's gone nowhere but straight up. Smiley face was a target we hit with Dick. We stuck it in there for his people because we said, let's mark that with a smiley face. And we came off. And then right here, we had another marker. We took it out because I don't leave them all on here. But we said, and Dick questioned me this day. He says, well, if you say it's a buy signal, why won't you buy it? And I said, well, Dick, because I think there's more potential risk on the downside than there is on the upside. So I will not buy it. I believe it's getting close to a top. So now what we've had this massive move up to our target. You see how it stayed in there for a week? That's what we're talking about, the strength. Now it's broken through and it actually gapped up. So here's what we've got. We've got a funnel, and the funnel can last as long as 2 weeks. But I think we're possibly going to approach potentially 5,000 on the Dow. And I think at that point, what I'm looking for now, it just needs to get to the box here, which is 47.70. Then it's in our zone where our members know that this is major resistance. If you want to take a profit, this is a point that you might want to be looking at taking some profits. But it could spike higher. And this is where we're talking about this massive move, because what you're going to get here is when we approach this top here, so many people are short this market because they believe it's going to crash. Do you know how they get out, JC? They have to buy it back. Yeah. And this is where we get the pump, and this market will probably overshoot, and we can have a massive spike just like we saw in the gold. So if I see something between now and generally Christmas, I always find it exciting. Christmas always has gifts for everybody, and there's lots of stuff that happens right around Christmas time. And you go after Christmas and go, oh, look at that. So there's a chance we may spike into the Christmas season. But be careful if you see that massive candle up and reversal. That, in my opinion, will mark the top of the stock market for months to come. Months. Now, from there, you slowly start doing this, down and up and down and up and down. And as we get lower, then we'll realize at some point, hey, this is starting to look ugly. Indicators are all negative. And even then, after you get that, that's when the real drop will come. And that's the part where people just throw in the towel. But that's much, much later down the road.
Capitulation part.
Yeah, the capitulation part, exactly. Yeah. So that's what the stock market looks like. We've taken out this top on here. We haven't on the S&P, but we have on the Dow. And I do think there's a chance we're going to get this big spike over the next few weeks into new highs, and that might be the culmination. I would not buy it at this level. I think there's a lot of panic buying going to be coming in the next week or two because, well, year end is another consideration, but also because a lot of people are getting destroyed on their shorts, because I don't know anybody that's not bearish on the stock market. But again, it's like the currency, it's manipulated. The feds can come in and they can actually buy equities. That's part of their new plan, that they can support the markets if they need to, and they will.
And going back to the Dow chart here too, how does this affect anything? Alistair McLeod was on the other day saying, hey, buckle up, the Federal Reserve is about to unleash QE to infinity, so quantitative easing. Where does that affect money flows right now into the stock market? If anything, does that affect your charts? Are you planning for this also in your algorithm?
Well, we are, because you can see that 5 wave there, that how high it is and how short a time frame. That could be something like that, because all you have to do is hint that they're actually going to do it, and that's all it will take to spike it. It maybe if they do it again in a month from now, it won't spike. It'll be already turned back down again. the reaction, the initial reaction is what we're waiting for. So when they finally come out, like for example, I don't want to get off track here. What it's saying here is that we are looking for a possible big spike. That could be why they could say, look, we're going to start easing. Well, of course, if they start easing, we're right back into the inflation scenario. And that may be a point where we're talking about gold going back up and retesting the 2150 and having the big push to the upside, or the silver completing that cup and handle formation. So it's the news when it comes out, the initial shock. That doesn't mean it's going to continue to go up if they go forward with more decreases.
Mm-hmm. Wow, fascinating. I appreciate that. Guys, just going back on the silver, we seem to be in a buy zone right now, 21, 21 and a half, 22 there, as per the chart from Martee. If you guys are looking to bulk up here, we have the 90% constitutional silver offered by Miles Franklin at $3 over spot. And if you're looking to bulk up a little bit more, you have a little bit more cash to put in, you might want to consider the 100-ounce bars. Those are at $145 over spot. Incredible price there from Miles Franklin. You can find those specials there at beyondmystic.net/silver. I'll bring the link down in the chat below. And I'm getting reports now that Rumble just crashed again. There's still some hacking issues at that end. So thank you guys for joining us here on the YouTube chat and Twitter as well. We're doing what we can. And of course, we're seeing more and more of these glitches at Rumble here in the last couple of weeks. And it appears that that's even more in the cards moving forward. If you haven't seen the movie yet, Leave the World Behind, Janine and I just did a decode on that last night, and it is forecasting this cyber attack that Klaus Schwab was talking about quite a few months ago. So that seems to be in our realm, guys. So anyways, maybe bulk up on silver while you can. Again, beyondmystic.net/silver. Martee, this was a fascinating episode. Really like what you're doing. Judging from the comments in the live chat, everybody's saying, dude, Martee's the real deal. I'm like, yeah, he's the real deal. So talk to them about your subscription service here. For those who are interested maybe in the trade calls, getting a little bit more information here about where the markets are going, and how do they subscribe to this subscription service of yours here on bullshift2020.com?
Well, right now, basically there's two levels. Okay. We do have a free membership, which basically is you sign up. There's no commitment of any kind. And I do a once a week update generally in the top 5. So we're looking at dollar, silver, gold, stock market, and Bitcoin. The subscription is more for people that are interested in actually looking for either hand holding or trading advice, or looking at where my thoughts are. So what happens there is we're supposed to get 1 or 2 alerts a week. We're getting like 4 or 5 because of what's going on. So I just update people constantly. Like last night when the market turned, I got on and said, okay, here's where our new numbers are. And they kind of trade. Now, I don't want to know what people do. We have monster traders. I'm talking about people worth tens of millions of dollars that trade. And then we have the guy that wants to buy one corn option that costs $300 and hang on to it for 3 months. So we do all of that in the system. We do a lot of options because, like, I personally believe options are a great tool. A lot of people don't like them, but if you understand how they work, there's very little risk. You get to educate yourself by watching it for a few months, and you have potential of making a 5 or 10x real easy if they work. Okay. So options are great as well. So we do alerts, updates, not alerts. Alerts is usually when we do an actual trade. I go on there and I show people, most of our clients set up with Interactive Brokers for futures. We set their page up so it's exactly the same as mine. So when I put the trade in, they see exactly what I'm doing, the buttons I click. Some will do it, some will do any, some will do 10, some will do 100, some will do 1. I don't want to know. That's not important. So that's the service. Now, normally that service is $199 per month. Right now we have the special running up till the end of this month, which is beginning of the new year, and it's $119 per month. You can try it for 1 month. If you don't like it, cancel it. But also, while I'm on here, we're going to offer an extra 10% for Beyond Mystic. We do have a code. We will publish it if we haven't already. There it is right there. Yep. And if you have any issues, guys, at all, reach out to me. Just bullshift2020@gmail.com, and I'll do my best to answer your emails, because we haven't tried it yet. It should work, but we'll make sure we get it done. So then the other 2 services we offer, one is called a one-on-one session, where you can talk to me, people that want to look at their portfolio, want me to check and see what their balance is like, their diversification, what they should be in, how to do this, how to set up an account, We do all of that. And the sessions are anywhere from 60 to 90 minutes. And again, that's available on the site. Email me if you want to look at doing one of those sessions at a time that's good for you. And then the other one, of course, is we'll be talking later on about it. I actually teach futures, options, and technical analysis. I've been doing it for 20 years. We recently started videotaping them, and we're in the process with JC putting together this new package, which is about 12 hours of maybe closer to 15 of actual education to teach you all about the futures markets, what they are, what they meant for, how to trade them, what contracts are, what margin is, and then getting into options, which you can either use on futures, equities, or even on Bitcoin. And then finally, technical analysis, how to read these charts to give you a better handle on when to be looking at buying or selling.
That's wonderful. Thank you so much, guys. If you're interested in checking that out, again, you can cancel after your first month. Give it a try. There's no commitment. You can do that at bullshift2020.com. And as the ticker says there, you can use the coupon code Beyond Mystic in one word, and you'll save an extra 10% off what is currently on sale already, as Martee just described. So thank you so much, Martee, for that. Martee, parting words here. There's a lot of nervousness in the air. There's a lot of astrology also suggesting we're in this Mercury retrograde now. A lot of weird things. People are afraid about the cyber attack, maybe another lockdown scenario, maybe a constitutional challenge here in the United States, maybe an escalating conflict of war. As people are trying to manage all of this, there's a lot of stress in the financial markets. What would you say is the best advice here on how to protect yourself, be nimble enough to make the moves that you need to make? What would be your advice here on how to traverse these difficult times here and how those affect our financial markets, Martee?
Well, to keep it real simple, the most basic ones would be, number one, expect a lot of volatility in the next few months. So be prepared, because if you're not prepared and you see massive moves, you're going to freak out and do the wrong thing, sell when you shouldn't sell, or buy when you shouldn't buy. But more importantly, I think the main thing I would give most of my clients or my friends or anybody that's listening that wants the advice is to be very well diversified. That's key, because as much as I would say, hey, I love Bitcoin, I think it's going to do well, I'm not an all-in kind of person. I will not do that, because nobody knows. Nobody truly, truly knows. Because if you're all in Bitcoin and something happens, even with a cyber attack, we're offline for 3 or 4 months, you're not going to be very happy about it. And you don't know how you're going to get at it or get out of it. Things like real estate, is it a good investment? Possibly. That might be if you paid for it, you own it, and you have a steady income. If not, maybe it's not the best place to invest. You want to be looking at possibly, again, precious metals, owning a certain percentage in gold and silver, and maybe some other tangible assets that might hold its value. How much cash? You want to have some cash on hand, regardless of what happens. Again, cyber attack, you can't get into your banking system. So diversification is number one. It's key across about 5 different platforms, and you need to be diverse. And then some will do well, some won't. But if you go and try and pick one and it's not the right one, there's a lot of hurt coming for a lot of people.
Yeah. And as the Economist said on the Citizen News article a couple of months ago, he says the policies right now are designed to create a lot of hurt for the people. Again, they are funneling in us into this new system of theirs. Cliff I's in the chat. Sorry, Cliff. Yeah, I know Rumble's been broken here up and down since we're live. Hopefully you guys can rewatch this on the YouTube channel as well, and that the Rumble feed will be back up later today. So thank you so much, Martee. Great interview. Man, we have a lot to cover, and it was fascinating. Judging by the comments also, guys, leave us a comment below. Let us know how Martee did, what you want him to focus on perhaps in the next show we're going to produce together. A big thank you to all of you watching us live today. And again, as a reminder, we bring that back up on the screen for you guys. If you want to take part in the Bull Shift 2020 product line here, you can use Beyond Mystic in one word as a coupon code here to save an extra 10% off there. That's bullshift2020.com. And this was, yes?
One thing I just noticed earlier, I just made the screen larger. It says Bullshift 22, not 2020.
Oh, I made a mistake there. That's my fault. But the coupon code still works. Yes, I was doing that on the fly. Thank you for correcting me, Martee.
No problem,
Martee, you have the eyes of a hawk, sir.
Oh, yeah,
all right, guys. This was the Beyond the Chart with the Market Oracle and I have an hawk, Martee Hibbs. Thank you so much for joining us. And thank you, Martee, for all your time today. Really,
you're very welcome. It was an honor. We really enjoyed it. Thank you.
Awesome. Have a great day, folks, and we'll see you soon. Au revoir.